$38.10. That's the actual Social Security raise hitting your bank account in January 2026. Not the $56 headline you've been reading, not the 2.8% cost of living adjustment the SSA just announced. The gap is Medicare Part B, and nobody's doing this math for you. In the next 9 minutes, I'll show you exactly where the missing $17.90 a month went, walk you through Linda's numbers at her specific benefit level, and give you the one decision to make this week, before the January 1st payment lands in your account. Before we dive in, a quick note. This content is for educational purposes only and does not constitute individual financial advice. If you do want to speak to a professor about your personal retirement situation, scan the QR code on screen. All right, let's get into it. Now, every October, the Social Security Administration announces the cost of living adjustment, the COLA, that applies to benefits starting in January. It's calculated from the Consumer Price Index for Urban Wage Earners, or CPI-W, measured from the third quarter of one year to the third quarter of the next. For 2026, that calculation came out to 2.8%. Sure. If you're the average retired worker, your monthly benefit moves from $2,015 to $2,071. On paper, that's $56 more per month, or $672 across the year. Now, the part the headline never includes. There's a second number that never lands on the same day, the Medicare Part B premium. The Centers for Medicare and Medicaid Services, CMS, announces the Part B premium separately, usually within about 3 weeks of the COLA. For most people collecting Social Security, Medicare Part B is deducted directly from your check before it ever hits your bank account. So, when Part B goes up, your COLA is effectively reduced by that amount before you see a dollar of it. CMS has already announced Part B is moving from $185 flat to $202.90, a $17.90 monthly increase. Subtract that from your 2.8% raise, and the average net increase falls to $38.10 a month. That's the gap between the headline and the reality. And it matters because your household budget runs on the net, not the headline. Social Security compares the average CPI-W index for July, August, and September of this year against the same 3 months of the prior measurement year. The percentage change, rounded to the nearest tenth, becomes the COLA. For 2026, that came out to 2.8%. That's it. No committee vote, no political negotiation. It's a formula, and the formula ran. Here's the arithmetic every retiree should run this week. Start with your current monthly benefit. Multiply it by 1.028. That's 1 plus the COLA expressed as a decimal. The result is your new gross benefit for 2026. Now, the second step, which most headlines skip. If you're enrolled in Medicare Part B, and roughly 94% of people collecting Social Security retirement benefits are, your Part B premium is withheld directly from your Social Security check. When that premium goes up, it's withheld at the higher rate, starting with your January payment. For 2026, the standard Part B premium moves from $185 to $202.90, an increase of $17.90 per month. So the math for the average retired worker looks like this. $2,015 in current benefit grows by 56 to $2,071, then loses $1,790 to the higher Part B premium for a net raise of $38.10 a month. $457.20 across 2026. That's the number your checking account will actually see. And if you back it out, that net raise is about 68% of the headline. The other 32% is going straight to Medicare. Quick note while we're here. If this kind of breakdown is what you need on your retirement checks, subscribe. We publish 5 of these a week. Linda is our stand-in retiree across this channel. 68 years old, widowed, retired teacher in Michigan. She collects $2,247 a month in Social Security, is enrolled in Medicare Part B at the standard premium, and isn't collecting a pension. Her situation isn't universal, but it's close enough to median that her numbers translate for most of you watching. Apply the 2.8% COLA to Linda's benefit, and her gross monthly Social Security rises to $2,310. That's a $63 increase before Medicare. Subtract the $1,790 Part B delta, and Linda's actual take-home Social Security in 2026 rises by $45.10 a month, $541.20 across the year. Is that meaningful? It depends on Linda's budget. For the retiree whose essential expenses already consume 85 to 95% of their income, $541 doesn't restore spending power. It keeps pace with it, roughly, and that's the key point. COLA is designed to preserve purchasing power, not to expand it. When prices rise 2.8% across the measured basket, The COLA moves you 2.8% to keep you even. Subtract Medicare and you fall slightly behind even. Linda's planning move this month is to verify her January payment amount in the My Social Security portal once SSA posts the individual benefit notices, usually in early December, and to reconfirm her household budget using the net figure, not the gross. Here are the 3 things to do this week before your January 1st check arrives. 1. Log into My Social Security at ssa.gov My Account and pull your current benefit statement. Do not rely on the headline COLA number to project your payment. SSA will post your individual 2026 benefit notice in early December. That's the only number that's actually yours. Everything else is an average. 2. Verify your Medicare Part B enrollment status and whether you're paying the standard premium or an RMA adjusted premium. If your modified adjusted gross income from 2 years ago, that's the 2024 tax year, exceeded the RMA thresholds, your Part B premium is higher than the $200-$290 standard rate. The 2026 RMA brackets were released with the Part B announcement. First bracket starts above 109,000 single or 218,000 joint. Link pinned in the description. 3. Rerun your monthly budget using the net COLA number, not the gross. The retiree who budgets off the 2.8% headline is likely to overspend by roughly $1,790 a month, which is $214.80 across 2026. Small number, but it's the exact number that matters most for staying inside a fixed income budget. If you'd like the full breakdown, including our COLA worksheet you can fill in with your own numbers, I've put it on our site. Link's in the description and it's free. If you only remember one number from this video, let it be this. $38.10. Not 56, not 2.8%. Budget off the 38.10 because that's the number that actually lands in your bank account. The rest is headline arithmetic. A few notes on what I covered because honesty on sources matters more than getting the hook right. The $56 average and the 38.10 net I walked through are the arithmetic for the nationwide average retired worker. They come from SSA's own fact sheet and the CMS Part B announcement. For you specifically, the numbers will differ. If your current benefit is above average, both the gross raise and the Part B subtraction still apply, which means your net percentage is actually slightly lower than the 2.0% Linda sees. If you're below average, the net percentage is actually slightly higher. Either way, the Part B bite is a flat dollar amount, so it hits smaller checks harder in percentage terms. That's a regressive artifact of how the system is designed, and it's worth knowing. And a point I'm watching. For the first time in roughly 10 years, the Part B dollar increase is large enough that at very small benefit, checks the hold harmless provision could reduce your Part B bite below the full $200-$290. If your check is that small, your notice in December will show it. Don't compute the subtraction yourself. Trust the notice. What's coming next on this channel? The IRS retirement contribution limits for 2026. That's 401k, IRA, and catch-up changes. Land in early November. I'll walk those the morning they drop. Thanks for watching. If this helped, subscribe. We publish 5 retirement finance videos a week, and I'd like to see you on the next one.
Hey, before you go, if you're serious about your retirement, we'd love to help. Scan the QR code on screen right now or visit the link in the description to book a completely free strategy session with a qualified professional. It only takes a couple minutes to fill out, and there's absolutely no obligation. Take the first step today. We'll see you in the next one.